Hey, good afternoon, YouTubers. Welcome to another Friday Stock Talk Weekend Analysis. Today, I'm going to be covering something called risk management. And I'm also going to explain how you can risk manage yourself to where you have more winnings than you have losings. Because if you do this right and you have your stop losses right and you're making the right trades, you should be making money every day. Yes, there are some days where you have bad days, but that's going to counteract because you're going to have some days where you have really good days. So I'm going to talk about risk management and how you can trade to make way more money and cut your losses as soon as you can. Don't hold on to losses. So my first example, and I'm actually going to go over Tesla. I had this mistake actually happen to me. I made a call out that was wrong, but I also gave a stop loss to two in case something was to go wrong. So today I was trading Tesla. I was trading Tesla all day. Tesla was my biggest stock today. Why? Because it's very volatile, and what that means is there's a lot of percentage going up and a lot of percentage going down. So first, I just want to talk about my mistake, and then I want to show you guys how I corrected my mistake so I wouldn't lose too much money. Okay, so I made a call out right about here. Right about, let's see, right about here at 1631. As you can see where this yellow support line is, and it dipped right below those two lines right here, right down to 1632. And I was like, hey guys, Tesla is a good short. I have a group chat. I sent to like 15 people that follow me. They've been following me through Instagram. They follow me through my YouTube videos, and there were some great people. They've been very nice to me. And the reason I say this is because I help them out, and they also help me out. The reason I made a mistake is because I made a call out at 1631 because what it looks like it's gonna happen, it looks like it's about to break this and start downtrending back to an easy trade of 1590. And I fully expected that to happen, but just as this dipped, it had a huge rebound back above this line to where I said the stop loss would be at right around this line at 1643, 1644. And as soon as that happened, I cut my losses, and I don't care about the rest. So this is a win to lose ratio that I lost. I'm gonna win a whole bunch, and I'm also gonna lose hopefully less than I'm winning. So essentially, what happened was I made this call out, and I also gave a stop loss that was at 1643, just in case something went wrong. Which for this case, it did. So I want you guys to learn from my mistakes and what I'm doing to correct my mistakes. So this was my ratio to win. If I won this trade, I would make a 2.23% increase, right? If this was to go up, that's only a 1% increase. So my ratio is almost 50% higher than if I was correct to if I was wrong. Does that make sense? So essentially, yes, I'm gonna make callouts that are not gonna be right because I can't predict the future, but I'm making callouts that have a bigger risk to lose ratio to capitalize on winnings. So I predicted that this was gonna drop to 1589 because this was the purple line. If you go all the way back to history, like I've shown in all my charts, you will see that this purple line is a huge support, and I highly, I definitely think either Monday or Tuesday we're gonna be hitting this purple line anyways. But regardless, I made a call that I was wrong. The stock just suddenly jumped and we went up all the way up to there. So you can see where it bounced right here. I thought we were gonna break it. Apparently we did not, and it had a huge bounce upwards. So what I'm doing though is I've learned from my mistakes in the future not to sell and cut my losses before they even increase. So if I didn't do my stop loss at let's say at 1643, 1644, like I was saying, I would go from 1% all the way up to 1.5. Now that increases my risk management, and that's not what I'm trying to do. I'm trying to trade smart and make good risk management for myself. And I'll show you guys a whole bunch of examples that I have been doing. But a good way to do this is, well, number one is risk no more than 20% of your capital. So if you have 100,000, you would keep 80 on a safe stock, 80,000 on a safe stock, which right now I definitely I recommend just blue stock chips, and then just hold on for them for a year, for 2 years. It doesn't matter because you know that stock on the yearly average they go up, and that's all I care about. Next is you want to tighter your stop losses the larger your position is. So let's say you're holding that 20% that you want to trade for options or you want to put on a risky stock or a penny stock. Make sure that your stop loss is larger than the. Make sure you tighten your stop loss. So let me see if I can explain this. But you want to. I mean, I think it's kind of self-explanatory. But you want to tighten your stop loss, which means if you're watching the supports, this would be a tight stop loss. All right, so if you went down below it to 1625, that would be a tight stop loss. The more you risk, so you're preventing huge losses for a huge position. Now, if you have a larger stop loss, you only want to do that when you have a smaller position. So let's say I have 20,000 and I put 5,000 into Tesla. That's only a quarter of already the money that was gonna be for risk trading. So that's not too bad. And what would happen is this. Let's say for this, let's say it dipped below 1620, you might give it more of a wiggle room. So let's say this would be a tight stop loss, and this would be a loser stop loss. So those are for not so much when you're betting too much. But if you definitely do have a larger position, you want to make a tight stop loss, so you're cutting your losses even greater than before. Okay, and another thing is, guys, when you do risk management, like just before, that was a 50% higher because it was a 2-to-1 ratio, which means I am definitely decreasing my management of losses. Another example that I have, and I can give you, I guess, hundreds. Let's go back to Apple. All right, Apple. So let's go back to Apple, and I trade completely just by lines and support lines. So we can tell that this line right here is a huge support line. Okay, you guys see that right here? Okay, where would you guys put a stop loss if you bought right here? Okay, this would be a tight stop loss, and this would be somewhere over here would be a loose stop loss. Does that make sense? So you would have sold here if you had a high position, because this could easily bounce back down. But if you had a loser position, you might be selling up here, and you will have won that trade. So that's all risk management is. If you're obviously trading and you know where the supports are, and you can see where all my supports are, you can see exactly where they bounce, and I'm always completely right about them. Most of the time. But the thing is, let's say you lose two positions and you win three, and then you lose two more, and then you win, and then you win two more, and then you lose one, you win one, you lose one, you win two, you lose one, you win two. The more you win to the least you lose, you're going to be making money over the course of the day. If I'm making 10 trades a day and 6 trades or wins and 4 trades or losses, I call that a good day. So that's something also that you want to think about is how your management your losses. If you're holding on to losses for way longer than you should have, then you're not doing the right thing. All right. So don't hold on to losses, and also don't hold on to winnings. If you made 500 bucks and you see it drop down to 300, sell it. Cash in that 300 and make that another, and then make another trade that you think has a good win to lose ratio. Don't let that stock go to zero. If I see a stock, let's say I wake up, I've been holding Apple over now, which I don't recommend holding over that, but I do it sometimes, just because I think some stocks do pop off in the mornings and you're just too late to buy at that point. Apple was one of them when they announced a stock split, and so was Tesla. So those are some stocks I'm holding because I'm very confident that they're gonna pop in the morning, and those are usually the best times to sell when you have a huge pop in the morning. Regardless, so let me go back to Apple. And if you guys, I haven't really shown my charts for today, but this is what I'm predicting Apple to do. I think Apple is gonna keep going up. I think we're definitely gonna be retesting this line very, very soon at 1462. Um, So yeah, that's my little tutorial for risk management. I hope it really helped you guys. Now I'm just gonna cover the stocks that I usually do, and I'm gonna do Apple really quick. As you can see, today was the 14th. So let me go back to the beginning. Okay. So 9:30 pops, and again we have we have good indication that this is hitting the third time. This was an easy sell in the morning of Apple. Sadly, I wasn't holding Apple overnight. I was playing with Tesla with 20% of my funds. So I had a big risk going into Tesla. This dropped down to this green line, very obvious. Like you can tell exactly where to buy this. And if you buy here, you would know that it's gonna hit this orange line just one more time. This would be a tight stop loss if you sell right here. You're still making money, and then if it goes over, whatever, you just don't think about it. And then if it hits here, it hits here. We're making a support line, so most likely we're gonna see this line hitting this orange line undeniably somewhere in Monday or Tuesday. So it could be here right off the opening, but we're eventually going to hit this orange line, and that is a good indicator to buy more Apple shares. Okay. Now, if this hits here and this hits the top line over here, this might be a good indicator to sell if you have a tight stop loss. But you see how you're making profit still. All right, guys. So let me hop on the Tesla. This is the stock I was trading today a lot. Let's go back to 9:30 on Tesla. Okay, here we go. So now I knew Tesla was a little too high. It kind of was. It kind of felt like it just didn't feel right. Sometimes you just have that gut feeling that Tesla is still a little bit too high, and that's actually what I felt this morning. So like I said, I was holding Tesla overnight. And usually the best time to trade options is the first 30 minutes, and I sold my Tesla share right away, and I was just waiting for a good I was waiting for this line to hit all day, to be honest. I had this line, you can go back to tomorrow and you would see it again, which is this line right here. And I kind of felt confident that it was going to hit again. And I had another, and let's see. So I had this drop. I thought it was going to break a little more. And sadly, we didn't. And I thought it was going to hit this line, just break. But in the other case, it went up. And I caught my losses short as soon as I could. So, that was just my management that I was doing. I thought this was going to break this low line and go down here, but unfortunately, I made that back hole today. So that's what I was explaining before. Um, the reason also another again is because it broke two lines, and I was just so confident. I'm like, this is going to break, and unfortunately, it did not. So that so it is what it is, guys. This was my biggest loss today because I was putting like at least 20% of my portfolio into this. I made a call to sell here because it was also breaking this line over here. I had a lot of like mental like support that this was gonna happen, but again, guys, you're not gonna win every trade. So let me hop on to CRWD. Okay, this stock I said yesterday was gonna pop off. Sadly, it is just not taking off right now. The reason I bought CRM yesterday right here is because I thought this was gonna pop off. I had a great morning, and I didn't sell because I didn't see a reason to. There's just no support that this was gonna go back down. I thought we were gonna go straight up to 11, 12. So this is again my risk management. So you see when I bought here, I so this is a huge risk management, and I'm gonna show you this with my ruler. So this is a 11, 12% gain, and my losses were very minimal because I was gonna sell off right below the that line that I have drawn right there, and my losses will have only been like 1%. So that's a 11 to 1 ratio. I'm still holding CRWD. I made only like $50 in profits because you know how options depreciate over time. This stock only went up by like 0.36%. So whatever. It is what it is. And let's see. Did I cover Apple yet? I think I did. And lastly, let me cover AMD. I was not trading AMD today, so I haven't really drawn new lines. But you can tell how the breakouts tell you which way it's going, and then now we have a bottom, we have a medium that was gonna cross each other. So this created a new trend, and AMD is just pretty much going sideways. So whichever way AMD pops, on Monday, that's gonna be a good indicator to either buy or to go short. So you can see how it's just going sideways. I'm not a big fan of AMD right now, but just keep that in mind. So that's it, guys. I just wanted to cover a few stocks before I left, and just to get me busy for the weekend. And here's just more talk about win to lose ratio, guys. Anyways, guys, I appreciate all the views. I appreciate you guys coming back to watch my videos, and I hope you guys have a great weekend. I know I'm going to the beach next tomorrow and just enjoying the sun. I've been working like crazy ever since I started getting more leads for solar. But let me know if I can answer any questions, and let me know if what you think about my risk management. Let me know if I can help you do any more charts, because I have my phone on me. I can answer any questions. And yeah, guys, hope you guys have a good weekend.